Good evening, everyone. My name is Paul, and I'm just going to walk you through a quick presentation of personal income tax. Now, before you could set the table of personal income tax, you have to look at different factors in Canada that are not truly discussed. You're talking about holistic numbers that are viewed by the NDP and the Liberal Party that basically talk about median income growth. And basically this chart was from a CNN interview, and you're more than apt to go out there and Google it. You can basically look at Canada's middle class and compared to the US on YouTube, and you can get this video. Basically it's showing you median income growth over the last 30 years. Well, in most cases, the way you're going to focus on is the two middle countries, which are Norway and Sweden, which are Scandinavia. But basically, what this basically does is they're basically telling you that after tax dollars for median income here, for those particular countries, so that's that bounty that goes to social programs, basically is increased in those countries like Sweden and Norway. But if you look at Canada's comparison to the US, we've done a lot better. Now, let's stop there with Scandinavia, because it's constantly compared to us that we should be like them. Realistically, some of you really need to go out and do some reading on Scandinavia, because Scandinavia is not all set up to be what it's so-called being. There's some fallacies there. First of all, they have typically higher consumption taxes there, so the consumer pricing there is very, very expensive to live. In a lot of cases, they have to import things in like Sweden and Norway. Second point is that basically the desire or drive to advance themselves isn't the same there because of the way the middle income people are treated in those countries. They don't basically see any real movement to move any further ahead. So those are the key critical aspects that drive that. Let's talk about the key pronounced area, and this is an area that I think deserves more focus, and this is the kind of area that is hidden from the NDP and Liberal statements. And this is why I picked on this area, because Stephen Harper took office in 2006. So we had the recession and downturn from 2008 to 2009 and the recovery over a few years afterwards. And if you look at that and factor that is, Canada compared to the UK, our median income growth since 2000 is almost equal to what's happened in the UK. We've done better than Spain and US, but yet our economic growth is very similar over that 10-year period to what it is with the rest of those countries. So if you think of this in perspective, our growth is comparative. We've seen income growth. It's not growing at a huge pace. It works out to about maybe less than 1% a year, but it's still growing. It's still growing at times. There's peaks and valleys where we've seen increases. It hasn't been stagnant for that whole 10-year period, and that's the misnomer that you're hearing from people. This basically just kind of talks to you that most cases how taxation works quickly is it all goes in a bucket. That money gets redistributed out. Harper has honored the transfer agreements between the provinces where he gives 6% more to healthcare, and also the Canadian social transfers he's given money more too. So as well as other direct program spending. That's the money that gets collected in that goes back to benefit you in terms of the overall redistribution of wealth. That again is not discussed. Here's the focal point I really want to talk about. The first few slides are kind of give you an idea of a holistic view of what's happening in terms of the median incomes in the country, in Canada as compared to its peers. The second point I want to talk about is 5 specific policies here. CPP Enhancement is basically on the campaign trail. The way it's sold and the buzzword, it's an investment in your future. Yes, it is. But how is it funded? It's funded as a match. So for example, if they decide that they're going to increase CPP by $500 to you, okay, basically the government will basically deduct $500 from your paycheck. The employer will match that $500. So the overall $1,000 that goes into CPP is coming partly from your matching, partly from business. It's a business expense. And guess what? Why are they selling it the way they are? Is because they're basically telling you, instead of putting your money into a tax-free saving account, I'm going to take it from you because I'm smarter than you are when it comes to your money. I can handle your money better. Plus, I've got alternative uses for that money. I want to build roads. I want to do other things with that in pension fund assets to kind of tell you what I'm going to do with that money. That's the first thing. Second point on here, family tax credit. This one has never been truly understood or marketed properly. Basically, it replaced the non-refundable tax credit systems for families. What's that mean? It's been replaced. Other words, it's been modernized to kind of relook at how the family operates. Yet, Thomas Mulcair and Justin Trudeau, in their intricate wisdom, want to eliminate this program, and that's fine. It's their choice, because it's a $2.2 billion plus program. However, what they're not clear is where is the non-refundable tax credit program that comes into this as the replacement. So, in general, and I just looked at some numbers quickly, just on the child care non-refundable tax credit, the child portion of it, the deduction for having a kid under 18, it's about $1.5 billion to the families. So that almost offsets, if you look at all the other family rebate stuff, close to what the family tax credit program's doing. So all Harper did was relook at how income is earned to kind of see better ways to share that taxation and the burdens. But that's not discussed. The next point I want to talk about is TFSA. This is another area where the federal government bumped it up to $10,000. The argument from Justin and the Mulcair is it doesn't benefit. A good chunk of the people are using that, and you're more welcome to go out and do a Google search on TFSA to look at the stats. But they are being used because there's good benefits here. If you put money in an RSP and need to borrow against it, then you take it out of your RSP and it's taxed. If you put money in a TFSA and take it out, it's not taxed. So how is this not benefiting people to save? And if you want to go take a look at what's happening with retirement savings, go look at the CDL Institute's report on savings. It tells you people are saving for retirement, and TFSA is one component of it. Tax rates. Mulcair has really not come clean on terms of personal income tax rate, but he has been clear, just like Justin Trudeau, is the top 1% will pay more. Now, that being said, the top 1% pay about 18% of the federal income taxes. Don't believe me? Go take a look out. Do a CBC look on their site about analysis of the top 1%. Also, there's also an article from the New Brunswick government that did where they were looking at increasing the top 1%. Guess what they found out? It doesn't provide the bounty. Because when you deal with the top 1%, they know how to work within the CRA, which is the Canadian Revenue Agency's Income Tax Act, which guides us, the rules. It's all legitimate. It's all about moving things around to passive to aggressive management of income. It's the way you move things around between income tax rates and policies. That's legitimate. Top 1% have that ability because they have accountants and lawyers looking for it. So that we know. Harper won't change anything related to tax rates other than he'll continue to look at them to make sure they make sense. I will give credit, Justin Trudeau is looking at a middle class taxation rate, but it's negligible in terms of what the impact will be, and it hasn't been quite clear in terms of what the real intrinsic benefit is. I threw stock options up here because it's just the way where people have options to buy stock options with companies as part of their compensation plan. Mulcair wants to go after it with tax. The number he's putting in there is actually pretty aggressive. I'm not sure that it's actually going to come to that extent. So, and it's actually in the scheme of taxation, it's $500 million. On personal taxes, we're roughly over 130. It's not 10%. It's not 1%. It's 20% of it. It's not enough that's going to do significantly to pay for his platform. So it's kind of more of a hit to go after the high income earners. Justin Trudeau spent nothing on stock options, and as I said, Stephen Harper plans to no change. Now, when you're sitting here in your house listening to the interviews or just reading any articles, it's incumbent on some of you to really start to dig in some of these policy changes. Mulcair is very good at speaking publicly, and I'll give him that. What he's not good at is providing details. He will never go beyond just say, don't ask me questions, I know what I'm doing. It's time over the next 4 weeks that you guys start asking questions of this guy. Because if you look at the past 10 years with NDP governments in Canada, there haven't been one that's been successful. They all have run deficits. They've all seen debt downgrades for their reports. And if you want to look at a real basket case, go look at Manitoba. Okay, they basically are a disaster right now. Moody's down. Okay, so honestly, you need to be asking yourself about the hidden agenda of Thomas Mulcair, and asking you some more specific questions about his platform costing. And there's videos out there that I've done on that, or go look at what people say about it. His so-called finance minister, Andrew Thompson, basically did an interview with CBC, and guess what? He couldn't even tell you what the daycare costs were. So if you can't explain a key platform stake, then how much do you really know about the costing your program that isn't going to hurt people big time? Harper's not perfect, but he is one thing. He's been consistent. You know what you're getting with Stephen Harper. Do you know what you're getting with Mulcair? Not likely. Justin Trudeau is all over the map. He's fed whatever his handlers tell him to speak, and he likes to use big words and sound bites about infrastructure, about investments. He's using the same buzzwords and campaign strategy that Kathleen Wynne is. Overwhelm people with buzzwords, but not with facts. It's facts that drive things, people. You look at your own results, and guess what? You look at your paycheck that comes into your account each week. You look at the net income, and you look at your expenses. Those are the facts. Does either Mulcair or Justin Trudeau look at those facts? Justin Trudeau has a trust company. That trust company is buried in corporations for him to kind of ways to manipulate income for his own. So how is he really speaking for the middle class? Mulcair is no much better. Career public servant. Basically, never worked a day in the private sector. Has no idea what it takes to compete. And he should be telling us how we should be saving our money? This is the same guy that remortgaged his house 11 times. Why would you remortgage a house 11 times? 2 reasons. A, take advantage of interest rates. B, you've got some debt issues on personal financing. 3, you're looking at ways to do renovations to your house. So if this isn't an issue around remortgaging his house, then why doesn't Mulcair complain why he did it? If you're going to be a leader of a government and prime minister of this country on the world stage, part of it is running a budget. If this guy can't run a household budget, how can he run a $240 billion annual budget at the federal level? He can't. So the decisions you have to make is get beyond the rhetoric and get around the buzzwords to go into the specific details. Google's a great tool if you go out there and research. Thank you.